We've got some fresh new young talent doing some things that I know you haven't heard before.
1, 2, 3, listen.
Welcome to Finances, your home for all things financial, investment, money and lifestyle. Hosted and curated by the very talented team of certified financial planners, Burke, Britton Financial Partners. Today's guest, before I start, Will McKenzie and Selena Parfett from Achieve Home Loans. If you've listened before, you'll heard episode 29 with Will, but you didn't join us that day, Selena. So normally I like to start with a little bit of background, and you told us while the mics were running that you used to work for K-Rock, so you're an old hat at being behind the mic. How did you find yourself in radio?
So that was a kind of a fluke. So I went from, I actually started in finance, and I went from finance to radio. So I was just doing reception. It was a reception job.
At K-Rock?
At K-Rock.
Yep.
Well, it was actually Bay FM.
Yep.
And then Bay FM joined K-Rock together. They were bought out by K-Rock. Then I went to K-Rock, and then I started doing assistant to the general manager, and then I started doing promotions, and I started doing on-air stuff, and it was fun.
Who convinced you to do the on-air stuff, or was it just you fell into it?
No, they kind of, convinced me to do it. I started with promotions, and then I was kind of out on the road doing giveaways and doing live crosses back to the station, and I guess they liked the voice. And then I started doing the on-air stuff with Peter Mobbs and doing some night stuff.
So your benefit is you actually have a head for television and a voice for radio, whereas Will and I have got the
good head for radio.
Yeah.
Well, I don't know if I agree, but yeah.
Well, we haven't got the videos on today, but people can jump on the website. Is your profile will be on the Achieve Home Loans website, I'm sure. You got a little profile pic there or not yet?
I don't, but Will has. It's all about Will.
Okay.
Yeah.
Well, I'm sure Will begs to differ. I know for a lot of our clients, obviously when we talk about Achieve Home Loans, Will and Selena are what they talk about, because they get a bit of you from both ends, Will face-to-face, and then obviously all the back-end grunt work. A lot of instances they're dealing with you, Selena. So.
Yeah.
And they love the work that she does for them too.
Yeah, and we do too, as a business that introduces a lot of our clients over to Achieve. Yeah, the feedback and the compliments of the work that you do, Selena, is exceptional. So
thank you.
Thank you for the work you do. Let's stick with your background. I did have you on. I did a Zoom with, I think it was more for our private clients back during COVID times, where we did a little bit of background for yourself. But let's do like a 60-second background of Selena. You had you starting in finance. You moved over to K-Rock. How did you end up finding yourself back in lending and working with Will?
So I actually went to Melbourne for a little while, and I was doing different work in Melbourne. So I was working for a finance group in Melbourne, and I was there for about 9 years, and then I thought I need to come home. I just felt I needed to come back home.
Didn't enjoy the big smoke?
I didn't enjoy the big smoke. I liked where I lived. I lived in Kensington, which was really nice, but I worked in Kew. It was just... that drive was just too much. So I just felt I needed to come home. I missed my friends and family. So I came home, and I saw that Will was still working, and I'd worked with him before I went to Melbourne. So we somehow got back together in work, and here I am.
Can you remember how that happened?
Yeah. So we saw that he was still operating, and the company that I worked for, I started working in his office part-time, kind of just working out of one of his rooms. And then I kind of went part-time with that job and started working 2 days with Will, and then eventually become full-time with Will.
Yeah, Will knew good talent when he saw it.
Yes, and the reality is that with the overburden of administration work that we have to do these days, I had to put my hand up and say, help.
So what year was that? So this is probably a nice segue into some of our topics today around administration in home loans. So again, people can go back to episode 29 and have a listen to our discussions earlier this year. But from an administrative point of view, lending, a little bit like financial planning, has gone through an evolution which has seen the compliance burden grow, and also the need for administration support to grow significantly from early years. When did you join, Will? How long ago was that?
So that was pre-COVID. So I started part-time, would have been 2020.
I think we checked the other day. It's
Yeah,
three years
ago.
Full-time, I
Full-time
think.
3 years ago. So it would have been part-time for the previous year.
Okay.
And I was doing admin for the previous employer. And I think we just realised it was just becoming too much admin work for one person.
What was the thing that you noticed the most, Will, in terms of the change in compliance burden and administrative paperwork?
Yeah, simply the amount, the volume of it, and also from it's called best interest duty that we have to abide by. So you have to go right into the ins and outs of the client's situation. You have to examine their expenditure over a period of time to make sure that they can afford the loan that you're proposing and things like that. And that all takes time, and you want to do it properly and efficiently.
So how did that differ from the era before that? So what did it look like? Just give us a...
Well, as you know, I've been around for a long time. long time. In the past, I mean, historically, if a client came in, okay, thank you, give us a couple of pay slips, we'll do a credit check. Have you got some equity? Beautiful, we'll do an application. It was as simple as that. And that was pre the Royal Commission, I suppose. And it's like everything in life, the bad apples in the barrel make it hard for everybody else. So we had never had an issue with a client putting them in over the head. It's never happened and it never will. But there were plenty that did.
Yeah, the potential exists for some people to take advantage of that situation.
Indeed. So after the Royal Commission, it came out that a lot of that had been happening. So now the banks and the brokerage industry are compelled, I should say, to do full compliance and do full checks on expenditure and loan affordability. And just the simple amount of time that it takes to do that, for one person to do it, just wouldn't give you enough hours in the day to see any more than a couple of people a month. So you want to do justice to the people that you are dealing with. So to do that properly, you need to get some help. And that's where Selena first come on board. And as is evidenced by the client's attitude to her help, she's very, very good at doing that. She builds rapport with the clients very, very well. And she's very, very good at her job in establishing relationships with the clients and also gleaning the information that we need to do them justice with a full application that we know will get approved when we put it in.
Yeah, it's interesting when you talk about relationships. I think we probably talked about this in our last podcast, and just about every professional that I've had on the podcast, regardless of the area of expertise, technicality, nearly every profession, if you boil it down, the importance of relationships is the cornerstone. And I think in the midst of all of this compliance burden that both the financial planning industry and the finance industry have had, the cornerstone of successful businesses has always been relationships. So let's talk a little bit about one of the topics that we wanted to talk about. I think you'd sent through to Amy prior to today was probably around administration, but sort of preemptive work that people can do to make sure that their success in getting a loan the potential is higher. Like back in the day, you said, Will, that people kind of walk in, give us a couple of pay slips, got some equity, and we're good to go. But now there's a lot more work that is required to get a loan across the board. We're talking about pre-approval. So when it comes to pre-approvals, let's start from the very basics about what a pre-approval is and why it's actually really important if you're thinking about buying a property or needing finance. Why is pre-approval? So first of all, what is it and why is it so important?
Well, Selena can tell us what pre-approval is, and then I'll tell you why it's important.
So pre-approval is basically a conditional approval. So depending on the bank, it's either like an approval that will last 3 months or 6 months. That allows you to go out and you've got confidence that approves you up to an amount. So you can, I guess, confidently know that you've got an amount behind you that you can, I guess, not go to an auction, but, you've got an idea in your head about what you can purchase for.
I guess from a practical point of view, if you're going out searching for a property, it's no good falling in love with something that's miles out of your affordability. Conversely, it's no good saying, I need to settle for something less than what I can really afford. So you need to know what's affordable for you for a start off. And if you go and buy a property without knowing what's achievable for you, it's fraught with danger. We had an example very recently where a client, they went online, as people are prone to do these days, saw an affordability calculator from somewhere, put in some numbers, didn't tell the full story, by the way, but they put in some numbers and the number came back, oh, yes, you can afford $270,000. They went out and bought a property, signed up for an unconditional contract, not subject to finance, not at all, and then came to us to get the loan. When we asked a few more pertinent questions, we found there were some other debts that they hadn't bothered to disclose, and that brought their borrowing capacity basically in half, from 270 back to about 130. They've signed up unconditional contract. They have to settle. They're not getting the money from the lender that they thought they were going to get. They're in all sorts of bother. To be frank with this person, the deposit they paid, they borrowed from a relative. The balance of the funds they'll need to purchase are going to have to come from a relative at all. Now, I wouldn't want to put anyone in that situation. It's not fair on the relos. And to be frank with this person, they've been a little foolish. But that's what can happen if you go out and buy something without either making it subject to a finance approval clause in the contract and or having a pre-approval.
Maybe just the point on conditional and unconditional approval. So do you just want to talk to that? I think we might have touched on this in the previous podcast, but for those that maybe didn't listen to that one, let's talk about the difference between conditional and non-conditional contracts.
Yeah, okay. Well, with contracts, if you go auction and you put your hand up and you win, there are no conditions. You own the property, so you've got to find the money somewhere. But even if you go and buy one on a private sale somewhere through an agent, I would always recommend, even if you think you've got your money set behind you, always make it subject to formal finance approval, because if you like, it gives you a safety net. Now, I wouldn't like to be on the high trapeze without a net underneath me, and that's the analogy that I would use. So if you make it subject to your formal finance approval, if for one reason or another it doesn't go ahead, well, you're not bound by the contract. Any deposits you paid, you should be able to get back, and you go on and live to fight another day. So you need to either have that conditional contract, and it can be, people quite often have subject to pest inspection or building inspection and the like, but finance is a big one that you should have in there. If you haven't got that in there and you've signed the contract, you own the property, one way or another you've got to either come up with the money, or if you don't, you'll blow the deposit that you've paid and you stand yourself to get sued for whatever loss the vendors incur as well. So
that example you had of someone finding a calculator online,
yep,
that I suppose the risk for people who are uninformed is that they do exactly that. So for those out there listening, and maybe you've given us a couple examples of horror stories, if someone's coming to you, someone's thinking about buying a property and they want pre-approval, what are the kinds of things that they need to bring to the table for you so you can actually make an assessment? Maybe I'll ask you that question, Selena. What is it that, like, what is pre-approval? Like we said, that it gives you an idea of what your borrowing capacity is so you can move forward with confidence that it's within your affordability. But what makes up that pre-approval? What people need to actually provide to you?
So they literally have to provide everything that they would for a normal application. So going back
Sounds too hard, Selena. I don't want to do it.
You have to do it, unfortunately. And for us to get an approval, it's the best way of doing it, because going back to that example that Will said, we asked her for everything. And I actually said to her, do you have any Afterpay, Open Pay, Zip Pay, anything like that? And she said no. Unfortunately, when we got her statements,
She did. Yeah.
So that's why we tell people, just be upfront, because we're going to find out and it's going to affect your borrowing capacity. So just provide everything and go ahead. Yeah.
I was just going to say that the pain up front, we've talked about this in a lot of instances, sometimes like with lending and with Afterpay and those kinds of scenarios, but just in life in general, sometimes in most instances, you're kind of better off to do the hard work up front.
Absolutely.
Like I said before facetiously, it sounds like too hard. That's what people legitimately think. I want that house.
Yeah.
Seems like a bit too much hard work for me to go and provide you all the paperwork. I'll just work it out later. The working out later is fraught with danger.
It's painful later.
Super painful.
Yeah.
So providing all the information, it is essentially a full application.
It is.
But once you've done that...
Yeah, the approval's there, it's in place. And with some lenders, when they find the house and they come back to us, that approval's still in place. All they need to do is provide one payslip. That's it.
An up-to-date payslip.
That's it.
Yep.
And then it's unconditionally approved as long as the property is accepted. So to do that up front, it might take you maybe 2 hours to get all that stuff together. If you focus on 2 hours of time, it's done. And we do the rest. So that's all you have to do. It's more painful for us, to be honest. It's more, well, for me, It's more painful for me. It's the work that I do is more painful than what they have to do, because there's a lot more paperwork than I have to do. It takes me probably half the day to do the compliance work, and Will to do the compliance work, than it takes for the client to get the paperwork to us.
And I think the point to make there too is, and people perceive it as being painful getting all the stuff together. To be frank with you, it doesn't have to be. We have facilities in place whereby we can actually download your bank statements and the like with your OK to make it so much easier. So really, it's not that onerous when it comes down to it. And you talked before about relationships. I like to think that I walk a mile in my client's shoes. So I know where they're coming from. I know what they have to do to make it work. But as Selena said, tell us your full story, and then we can go forward with confidence knowing that we can get you an approval for a certain amount. No good trying to hoodwink the system, because the system will find you out.
That's
and
right.
everyone then ends up with egg on their face.
Yeah,
and we try and make it as simple and easy as possible. So we don't want to get a decline. We want to get you approved. We don't do declines. And if I don't remember if we get a decline, we'll fight it and we'll go somewhere else and we'll get an approval, because we don't believe in declines.
Yeah.
Well, we would like to think we've done the homework properly in the first place, as
That
you
it doesn't
as you
the
alluded to
preparatory
before.
work.
That's
Exactly.
right.
Yeah.
Yes.
And if that's done properly, you can be reasonably confident that an approval will ensue.
Yeah.
But we don't take no for an answer. I had another client recently. They were probably caught in what's referred to today as mortgage prison, and we'll come back and talk more about that later. But they were stuck in a mortgage on a high rate, if you like. We tried to get that refinanced elsewhere, but because of the change in interest rates and things and the reduced borrowing capacity of people, and these people aren't Robinson Crusoe, but they were stuck in the mortgage because we couldn't get them an approval somewhere else because they couldn't afford to borrow what they already owed. And that's not a nice position to be in. We got three different lenders that we put it to. Were unequivocal when we put it in, but eventually came back and said, no, we can't see a way clear to lend the people this amount of money. Did we take no for an answer? No, we kept going, and we eventually found a lender, a good reputable lender, that has now agreed to go ahead and do that because they can see common sense. And I've got to be frank with you, common sense in lending isn't very common, but in this particular instance, the lender has seen that these people are good, credit-worthy people. They've never missed a payment in their life, and by refinancing them to a lower interest rate, it's going to help their overall situation. To me, that's common sense. They'll be paying out less than what they are now, and it can only help their situation. So we don't take no for an answer first time. If that's what the case is, we will continue to fight for our clients. The other thing, just moving back to pre-approvals as well, is that if you're contemplating buying a property or looking for a pre-approval, we will go through all that process free of charge. We don't charge for that. We'll get you that approval in your hand so that you can go out shopping with confidence. The approval is subject only to a satisfactory valuation when you purchase the property, and 99 times out of 100, that's not an issue. So you can be very confident when you've got that pre-approval in hand. Go out, and Selena said, if you find the property, it's then not a big task from there forward to move forward and make it all happen.
Yeah, it's interesting. I just made a note there about hearing you both talk is kind of a bit of a lifting of the hood and having a look at the workings of a mortgage finance business, because from the outside, a lot of people just expect that, I want a loan, I'm going to get it, and that, I shouldn't expect to, even pay for that service. I know historically that hasn't been the case, but as you start to understand about the effort and energy that goes into putting together a loan deal, if you like you've talked about the amount of work, like a half a day to a day's worth of work to get pre-approval sorted. You've been knocked back by 2 or 3 different lenders, having the skill and expertise to know where to go then. It's a lot of energy and effort to get an outcome. Now, you said that you don't charge for the pre-approvals process, Will, but I know that the industry has changed and your business structure has changed slightly, where you actually do, when you get through the process of applying for the loan, you do charge. And I think that it's probably important for people listening to understand and to realise that cost for them is of significant benefit when it comes to the outcome. Like the reverse, where you have someone that maybe says, well, I'm not going to charge you to get this loan across the line. They don't do the preparatory work that Selena's talked about. They're not as invested in the client relationship as you have talked about, Will. And then we find at the very last hour, their loan scenario has fallen over or the finance that they wanted is rejected. So I think that time and investment both in a small amount of cost, but also in relationships is super valuable when it comes to getting the right people behind you, the right team of people behind you to put together a loan deal.
Yes, and I think people will come to the realisation that we are finance professionals. What they are investing in with us is 40-odd years of experience. They'll go to their accountant, or they'll either put their tax in themselves, or they'll go to an accountant and pay him to do the tax. The accountant will get a better result than they will if they just put it in themselves. Financial planning's no different, and we're professional finance professionals, we're the same. If you want the best result and people who will really look after you, come to someone like ourselves. The fee we charge isn't exorbitant, in all seriousness, but it does help cover some of those administration costs that we've got. So that's the reason for it. But it is well worth the investment to make sure that you get the best deal that's right for you in your particular situation. And everyone's situation is different. People can go straight to the bank or they can go online, but you've got to be right in the very narrow alleyway that ticks all the right boxes.
That's a nice little segue into the difference between your business and the suite of lenders that you have at your fingertips versus one of the banks. So
Yes.
maybe either you want to talk to what those key differences are for the consumer, if you like.
Well, if you go to your bank, you'll be treated just as a number, not as a person, and to be frank with you, and you've got one shot. If you fit their narrow band of what they're looking for, their niche, if you like, yes, you'll probably get a loan through them. If you come to someone like ourselves, Selena, what do we do?
Well, we do a lot. We've got a lot of options, and we can present a lot of options. We can apply for pricing discounts with different banks. You can probably go to your bank and get a rate. We can apply for a discount and get a better rate with that same bank. There are different things that we can do.
But the banks have been known to play some games with those rate negotiations and the rate they first offer clients.
Absolutely.
I believe, I might be speaking out of school here, that there is the potential of an introduction of a one-time offer only from the banks. Is that right? Or have I mistaken that, Will? Have I pulled that out of my absolute backside? There might have been the introduction of some sort of legislation that saw that the banks, if they were going to offer a client rate, they had first-time, best-time offer so that they couldn't continue to come back and try and outprice.
It's been talked about, but it's not in play as yet, right? What the banks tend to do, and keep in mind there are something like 800,000 loans that are coming off very low fixed interest rates this year. What the banks are doing in an attempt to retain those customers, they are making them an offer, a fresh rate. Our experience has been that if we go back in and ask for pricing on those clients' behalf, there's more there. The banks aren't giving them everything. We've been able to negotiate better pricing. I think that's fair to say.
Yeah.
So that, I suppose, that advocacy, like even if someone is with the bank at the moment, having someone in their corner as an advocate to maybe look to push that pricing down a little bit further, there's definitely benefit in doing that.
Absolutely.
Yeah.
Yeah, because they can ring up and try and get a better rate, but we have what's called a dedicated broker channel, so we can actually try a different avenue. We may not always be successful, but we will definitely try for you, and 90% of the time we're successful.
And the other, just leading back to your pre-approval and an application, what we do versus you going to your bank and just having one shot at it, we glean your information, we feed that into our computer, and that sends it across a spread of 30 plus different lenders. And they will all come back with either green thumbs up or red thumbs down. Red thumbs down means for one reason or another you don't fit their niche. But there'll be a very, very wide spread of others with green thumbs up that say, okay, yep, on the information you've given us, we think you might qualify with us. And then we drill down a little bit further into those particular lenders to find out who's got the best rate and fee set up, etc. And we narrow that down generally to 3 and then present that back to the client, says, okay, here's what our research is showing us. You should qualify with XYZ Bank, ABC Bank and BYC Wholesale Funder. Here's their rates and fees are. Here's our recommendation. If I was in your shoes, I would probably go with that one, but at the end of the day, it's your choice. We would be more than confident of getting an approval with any one of these and happy to compare those rates with what you've been offered by your own bank. And 99 times out of 100, they'll be better. and I'll put my hand up. If your bank is the best, I'll say, that's great. Let us go and see if we can improve on that rate with your bank for you. And if we can get you a good deal there, we've done a good day's work, and you'll tell other people, and that's how our business will continue to grow.
I think that idea of getting information, gathering information so you can make an informed decision in anything is so important. Like rather than just you're looking at one provider and the options with one provider, have a look at the whole suite of providers, the universe of lending that is out there. And then again, like you said, we'll narrow that choice down to the three that appear most favourable and then make an informed choice yourself about which one you actually proceed with. You mentioned interest rates earlier, Will, and we talked about this on our last podcast, and you're a bit of an oracle with that because I think you pretty much hit the nail on the head with the direction of interest rates. I'm not going to hold you to what interest rates are going to do moving forward, but you did mention a couple of things about mortgage prison, but also the fixed rate switch that is looming, or people have been rolling off fixed rates that were at a very, very low rate for a while. What are some of the significant challenges you see with people as interest rates have risen, but also the looming challenges for people as the fixed rate changes to a variable rate, or they get a new offer of an alternative fixed rate which might just blow their head off?
Well, certainly, and there are many, many people who are going from a rate of around 2% to a rate of around 6%, and that's going to hurt. There's no doubt about it. So the rates are that's where they are. We can't do too much about it other than shop around to find the best rate that's in the marketplace at the time that suits your situation and that you will qualify for. And again, that comes back to communication. Tell us your scenario, tell us your situation, let us go to work and earn our keep and find a good deal for you.
Selena, what do you see as the greatest challenges for people? What have you experienced as some of the greatest challenges for people as they've seen their interest rate rise or an interest rate rise is looming for them?
I think a lot of the challenge is servicing at the moment. Affordability, just due to the rising interest rates and living expenses. I think because of the way to calculate the servicing calculators with the banks, and they add on, 3% onto their servicing rate, so it's really hard for clients to service.
Do you want to explain that? Again, this is an interesting element of how banks work out what your cost of living is and how you will service a loan. So what do they ask you to do? So when you're going for a loan, what does the bank want to know about your expenses, your income, and also what do they assume about your loan repayments and what the interest rate is or will be? So
with their servicing calculators, so they might have a rate, whatever their rate is, advertised rate might be, let's say, 6%. So when you enter that rate in, they automatically might add an additional 3% on top of that.
Okay. So why do they do that?
I think the reason they do that is to cater for additional interest rate rises that may come along, but they also don't cater for possible income rises that might, those clients might. They just don't cater for anything like that, but they also,
So it's a fairly significant risk management strategy for the bank to make sure that they allow an appropriate margin of error for potential interest rate rise. And a lot of people, I'm sure, would say, surely not. Surely we won't see another 3% rise in rates. But if you think about it from the bank's perspective, they are making sure that they protect their investment, I suppose, in the money that they've lent out, and that they can be sure that people that they've lent money to have the ability to service that loan.
That's right.
And they're not going to default.
That's right. And they've done that no matter what the rates are, they've always done and added an additional 2 to 3% on top of that.
Yeah. Well, the banks are governed by the prudential regulator, APRA, and it used to be 2% loading, for the reasons that we've talked about. And then APRA recommended, in this current rate environment, they recommended some time ago that changed to 3%, and the banks have followed suit. They've done what they've been told to.
What effect has that more broadly had on borrowing, say, globally, domestically in Australia, but across the board? That increase in the buffer to 3%, has it made it harder for people to get finance?
Well, that combined with the general rise in interest rates the last studies I saw, people's borrowing capacity over the last 12 months has been diminished by somewhere between 25 and 30%. Now, translate, if you year ago could borrow $500,000. Today you're going to borrow $400,000. That's the difference it makes. So it is quite significant and quite substantial.
That's an interesting point too, particularly for people who maybe people who are in constructing a home.
Yep.
And they have committed to a home on the basis that rates or their borrowing capacity was a certain level, maybe 12 or 18 months ago, and they're finding maybe that their circumstances or the lending has changed. What are you finding there in sort of new build construction and financing that? What are some of the tricks or tips that people can be aware of when they're maybe building a home?
Well, again, come and talk to us. Costs nothing to come and talk to us. Tell us your situation and we'll try and work with you to try and work through to find a better outcome. Rising interest rates are a fact of life. That's where they are. Personally, I think hopefully I might be proved wrong next week, but I think they've plateaued. And I reckon later this year they'll come back down. But if you need some help to get through the short term, there may be ways that we can help. But you need to come and talk to us, paint the picture for us where you're at, and let us see if we can do something to help. There are many things that we can do. We might look at alternate funding as a short-term gap to make up shortfalls, that sort of stuff.
So when you talk alternate fundings, what do you mean by that, Will?
Personal loans and the like. We've got access to personal loan lenders, all that sort of stuff. Again, that's not necessarily the best long-term fix, but for a short-term fix it may fill the bill. Once your home is... Let me go back here. When you go into a building agreement, quite often the lender will value the overall project at what the cost of your land was plus the cost of the build. I would like to think that once the build's completed, land values have gone up in the interim, building costs have gone up in the interim. When your house is finished, in all likelihood, it'll be worth a lot more than what it actually cost you. Okay. Now, you might have a loan that could have been at, say, a 90% loan to valuation ratio when the thing was approved in the first place, and because of that, you're on a higher interest rate than someone who might have a 70% loan. If we get your property valued at the finish and it's back to a 70%, we'll go back to the lender and renegotiate the rate for you and reduce those payments. That's the sort of stuff that we can do and I'm more than happy to do. So that's just one example that we could look at for people.
That doesn't happen if you don't have a good relationship with the person that's actually doing your loan.
No,
they're not coming back to the table once the property's completed and trying to renegotiate a better rate for you.
I can guarantee you the lender won't come to you direct and say, listen, you're finished, we want to give you a better rate. No, it won't happen.
Can I just go back, maybe, Selena, to the pre-approval process and some of the things that people can do to be well prepared when I know you give people a checklist and you tell them all the things that they might need.
Yeah.
But what are some of the things, if someone's listening to this podcast, what are some of the things that are really helpful that they can be aware of before they come to you? So you're going to give them the checklist for all the stuff that you need, but what's helpful? Is like a budget helpful? Like their cost of living? Is that helpful? Getting together all of their statements. I know you've got technology that you can use, but what are some of the things that are super helpful for you? So
we have a form that they can fill out. As long as they fill out that form honestly and correctly, that's extremely helpful. There is a living expenses page on that. As long as they fill that out honestly and correctly.
How do you know if they haven't filled it out honestly and correctly?
We will know from their statements. So we look at their statements. If they've said that they spend $100 on entertainment, which entertainment is, going out, alcohol, fast food, all that kind of stuff, and they say 100 and you can see on there that they're going out, every week or they're travelling every weekend and it's, $500, then we know that's not correct. So we will have a conversation with them and go, your statements are kind of, a little bit, do we need to up that? So we would talk to them about that. We wouldn't just obviously change that. We'll have a chat and go, look, maybe that needs to be adjusted. We won't automatically, assume that they're lying. I think they just haven't looked at their statements.
I think it's fair to say that historically people underestimate their
Absolutely.
living costs.
100%.
They don't until you look at it, you don't know because they'll just go, oh yeah, about $100. They got no idea.
Yeah, and that question was a little bit loaded from my perspective because in financial planning terms, we talk a lot of sexy topics like property investment and share market, but the simplest and probably most boring element of financial planning that crosses over in nearly every aspect of people's lives, including when they get finance, is having a handle on their cash flow and actually understanding what comes in and what goes out, whether they're in surplus or deficit, and where their money goes. And that, from my perspective, is the thing that catches most people out, is that they, to your point, Will, they severely underestimate what they actually spend, and it can be quite alarming, and it can be a shock to the system. The first time they've got to fill out your expense table spreadsheet, or they do our budget spreadsheet, it's quite alarming. If I was to say something that people should be doing prior to making any significant financial decision, it is doing a bit of a stock take and a reconciliation on your income and your expenses. A lot of people don't know the difference between their gross and their net income, or they're not quite sure all the direct debits that they've got set up and where that money goes. So I think that, from my perspective, I know that when there's urgency around, wanting to buy a home, you can get very emotionally attached to the decision of buying a home. And this is where, as a nerdy financial advisor, asking people to sort of step back a little bit and get their house in order. Any of the housekeeping elements of people's circumstances, I think if they can get those in order, when they do come to the table to sit with you, Selena, or you will, they're much, much better prepared, and you'll be happy because they'll have clear, correct and accurate information.
Well, the good thing about the technology that we have, which is called Cash Deck, if they were to do that as the statement option, it actually has a breakdown of the categories. So it shows where their money's going and it breaks it down for them, and I can provide that to them. So that's a really good, it's like a little budget thing, so it shows where their money's going. So that's good, handy for them as well. Yeah. Over like a 6-month breakdown.
Yeah. I think leading on from that too, we should say that when the information does come to us and we're looking at finding pre-approvals, we not only look at the situation as it is now, we also look at the overall situation and say, well, okay, on the basis of where you are now, your borrowing capacity might be $300,000. You've got a couple of credit cards and a car loan. You've got a heap of savings over here. If we use some of those savings to get rid of car loan, for example, or credit cards, all of a sudden your borrowing capacity of your home might go from $300,000 to $500,000. So we look at your overall situation to try and maximise what could be possible for you and find the best way forward.
I think that problem solving, which is essentially what you're doing when you're giving people advice, is you're looking for solutions and you're problem solving. And I think that gets lost on a lot of people when they think, I just want a loan. I've got to go and get it. But those small nuance, which aren't small in the grand scheme of things, like getting someone's personal loans or their credit cards consolidated to help their cash flow, which then helps them manage all the other areas of their life, is super important. And again, back to why would you invest time and money in engaging Will and Selena to sort out your lending and finance? For those exact reasons, because they're problem solvers. They're in your corner. They're making sure that they get the best outcome that they possibly can for you. Selena, you were going to mention something?
Yeah, I was going to mention a client we had who came to us who needed a bridging loan for a construction, which just doesn't happen. There's one lender that does that. He had tried everybody, couldn't find.
Do you want to explain what a bridging loan is?
So bridging loan is where you haven't sold your house, and you need to either buy or build another one, so before your other house is sold. So I don't know of any other bank besides the one we use that will do it for a construction loan. He had tried everybody, couldn't find anybody, came to us. Servicing-wise, it was very difficult. He had a car loan that he was paying $1,080 a month on. So the first thing we did was refinance his car loan with the company that we use, got that down to half, which then allowed him to service for the bridging loan. His house is now almost built and he is ecstatic. And how long have we been working with him for? 12 months? And his house is almost built and he is just the happiest client. And, I can't wait to see his house built because he is just, and that's just one of the success stories. So if we hadn't have been able to refinance his car loan, we would never have been able to help him. So
and I think that leads into something else too, that if you are contemplating doing something in the future, be it medium term or long term, come and talk to us. The sooner you can come and talk to us, the better off we'll be able to able to help you to massage your situation to the best effect, to give you the best chance going forward. And like we've got at the moment, I can think of 1, 2, 3 clients, first home buyers. Mm-hmm. They've just entered into contracts in the last few weeks, but we've been working with those people for probably over 12 months.
Yeah, 12 months.
So we don't put pressure on to, okay, here's your approval, get out and do something tomorrow. We say, righto, here's what we think we can do for you. Take your time, go out shopping, find out, test the market, see what's about. Come back and talk to us if you find that you thought you were going to buy something for 500 and all of a sudden the market's moved and you need 600. Come back and talk to us and we'll work with you. So it's not just a one-off thing. I would like to think that when we take on a client, they're a client for life.
Well, the proof of that is that those clients, some of those clients, their pre-approvals had expired. So they didn't have to come back to us, but they did. Mm-hmm. And one of those was a single guy who had come to us first. He didn't have a pre-approval then, but we gave him an idea of what he could borrow. He changed jobs in between, didn't have enough money at the time, changed jobs in between, became a firefighter, earned more money, and then okay, this is what you can borrow. So he went out looking, couldn't find a property. Then he found a girlfriend. Then they decided to buy a house together and signed a contract, bought a house. So he's got, right job, right girlfriend, right house, and it settles, in June. So he came to us, was it during COVID, wasn't it, 2 years ago?
Would be.
So that's the relationships that we have. So, I didn't hear from him for 12 months in between the 2 jobs, but we built that relationship with him. So he came back.
That story also speaks to change being the only constant in people's circumstance.
Yes.
And if you don't have someone that knows your situation intimately, then you're starting again every time you want to have another relationship or finance something again.
Yeah.
Whereas, like our industry, we know our clients intimately. They've been clients for life. Like you said, Will, our clients, we want them to be clients for life so that we know their situation in and out, back to front, and we can adjust and pivot with their circumstances as they change. I think that is critical.
Yes.
Now, would you believe that we've been talking for about 50 minutes, nearly an hour, Selena, and you didn't think you'd be able to talk for that long?
There you go.
Is there anything else the front of mind for the two of you in lending at the moment that you really wanted to talk about or that you think is important for people to hear as they think about financing a new home or refinancing an existing home?
I mentioned earlier mortgage prison, and to be frank, this probably isn't necessarily the case for most of your clients, I wouldn't think. But there are people out there who, for no fault of their own, if you like, they're trapped in their current mortgage because the way loan servicing has changed because of higher interest rates, they can't borrow as much as what they probably already owe. Now, just in the last couple of weeks, APRA, who is the prudential regulator of the banks, who make them add on that 3%, have come out and said that they will give the banks some leeway for people who are in mortgage prison to reduce that margin a little bit. So, in other words, common sense that I talked about before isn't very common, but it seems to be, might be in this situation. So they can see that by not being as hard on the clients when they're doing the servicing, they might be able to get them out of a higher rate loan into a lower rate loan, which will actually improve their overall situation. So if you're stuck in a mortgage, do you think, I owe too much, rate's too high, I can't get out because I won't get the money anywhere else, come and talk to us. We'll always try and find an option for you.
I think that recurring theme of come and talk to us is pretty strong, Will, that in all of this, just come and talk to someone, preferably Will and Selena, about your lending and finance arrangements, because we can find solutions to most problems. And I think you've talked with a number of our clients, Will and Selena, about where we haven't been able to find the solution we exactly wanted in the first instance, but through talking and negotiating and maybe looking at a situation from a few different angles, we've come to a conclusion that's actually been palatable and allows that client to move forward with what they want to do. So for those out there that haven't listened to episode 29 and they're not clients that have dealt with you in the past, Selena, where can people find you on the interweb? So how can people get a hold of you if they want to talk lending and finance?
So we're located, or the website is just achievehomeloans.com.au. We also have a Facebook page, And we're located at level 162 Little Mallet Street in Geelong.
So if someone wanted to get in touch with you, do they best to call? Do they go onto the website? Is there a little...
There is a little message on a little message button on the website. The phone number is 52297866, or just pop in. We're always happy to chat to people if they come in, or they can just call and make an appointment. Any one of those ways, we're happy to see anyone.
Beautiful. Will, anything in closing you'd like to say?
Just a quick comment on the housing market and where I think it's heading. It peaked in about May of 2022. It started coming off when the first interest rate rises came into play. It bottomed out in February this year, and it's now on the way back up again. I think with immigration increasing again, it comes back to supply and demand. I think house values, property values, will continue to increase over the coming months. So there's no better time to go and buy one than now, or if you're already in the market with one, hang on to it.
Beautiful. Straight from the Oracle himself.
And lastly, if you're looking to refinance, a lot of the banks that are offering the cashbacks are taking them away. So I think there's only about 4 banks at the moment left that are still offering cashbacks.
And if people don't understand what that means, until recently, or some of the banks touting the business of offering cashback to people to transfer their business to them. And so when one bank does it, the other one does, because they all need to compete. 3 of the majors already in the last 3 or 4 weeks have said that they're going to discontinue that practice as at the end of the financial year. So it's very quickly coming to a halt. And once they stop doing it, all the rest will as well. Personally, I don't think it's a bad thing, to be frank with you. It was a blight in our industry, and all it meant was people were chopping and changing from one lend to another just to get the cash back. In the short term, that might have been a benefit, but long term, I don't think it's a benefit to anybody. So anyway, that's just a comment on that side of things.
Great. Well, it's always a pleasure talking to both of you. I always learn something, and I always enjoy your energy and enthusiasm around getting good outcomes for your clients. So, Will and Selena, thanks again for joining us, and thanks for everything you do for our clients and all those clients that you have out there. Thanks again.
Pleasure. Thanks, Jay.
Cheers.
Thanks, Jay.
We hope you enjoyed today's episode. If you're keen to understand more about how financial advice could benefit you, follow us on Instagram, Facebook, and Twitter at Burke Britton FP, or Google Burke Britton Financial Partners. Check out our client reviews, testimonials, and make a time to meet one of our certified financial planners by clicking Book Now on our website. Thanks for listening.
Any information contained in this podcast is of a general nature only. No account was taken as to the objectives, financial situation, or needs of any particular person. Therefore, before making any decision, listeners should consider the appropriateness of any information with regard to their particular objective, financial situation, needs, and seek independent advice from a licensed professional specific to their circumstances.
All right, hit it.
That translates to, don't be a moron and act on what some random person says on a podcast. Take personal responsibility, do your homework, ask questions, and speak to an actual human that knows what they're talking about before you do anything. PB Financial Solutions Proprietary Limited, trading as Burke Britton Financial Partners, are authorised representatives of AMP Financial Planning Limited, AFS, licence number 232706.